everyone, and welcome to Your Broker Admin, where we share relevant updates, experiences, and ideas that help you deal with those everyday challenges. Whether you're in a support role or a solo broker newish to the industry, we're here to make your life that little bit easier. Well, summer has officially packed up for another year, and autumn has arrived, as has episode 63 of Your Broker Admin, ready to be put to work. Before we get into it though, here's your weekly bonus history bite. On this day in history, March the 4th, aside from it being my niece's birthday, here are a couple of other notable events. While George Washington's first inauguration actually took place on the 30th of April 1789, March the 4th became the official inauguration day from 1793 through to 1933. The date was chosen because it marked the day the federal government first began operating under the US Constitution in 1789. And in 1936, the first flight of the airship Hindenburg took place at Friedrichshafen, Germany. It was originally meant to be filled with helium, but the Americans refused to sell it to the Germans, so hydrogen was used instead. A bold substitution. Flying around in a hydrogen-filled balloon, what could possibly go wrong? Moving into the present day, we'll kick off with the reviews wrap-up, covering the week ending the 27th of February 2026, a blend of interest savings, a new lending opportunity that came down to impeccable timing apparently, and some insightful client conversations along the way. Then we'll head into this week's Humpday Helper, where I share something to be aware of with CBA's bridging finance. I'm Rob Cummings, thanks for tuning in, and let's fall into this week's episode. In this week's reviews wrap-up, we take a look at outcomes from loan reviews completed during the week ended the 27th of February 2026. We had the one review that was successful in obtaining a rate reduction. It was for a First Mac customer with multiple loans, some of which were on investment interest-only structures. We managed to secure a rate reduction of 0.14% on all the investment loans, providing the borrower with a $1,220 interest saving. Not a blockbuster outcome, but still a worthwhile win. We also picked up a new lending opportunity from one of the review clients before we even got to speak with them. Part of the process is to send out a reminder email advising the client that it's time for their annual loan review. We generally attach a copy of the latest property report for their review prior to us engaging with them. The client responded almost immediately with, "This is actually a great time for you to reach out, as we would like to know what our options are regarding our current loan and to see if we can leverage that to possibly purchase our own home at some point this year." Now, the client currently has an investment loan only through Granite. At this point, we don't know any details on amounts, etc., as we booked them straight in for an appointment with the broker. The review outcome was relayed back to the broker, ready for the appointment. And to summarise our month, during February we had 16 reviews completed, where a rate reduction was obtained, providing a combined interest saving of $6,300 for those clients. On top of that, we also generated 9 new lending opportunities for the brokers, totaling $4.7 million, plus the one from this week where we don't know the loan amount, which is pretty good given it was a low activity month overall. Now, from a client conversation perspective, here's a couple more examples of how relationship building creates movement. Firstly, a First Mac customer that we obtained a sizable rate reduction for them last year. When we spoke with them to share the good news, they shared with us that they were currently inflicted with sciatica pain and they were on pain relief drugs, but still appreciated the call. This year, our review ended up with a no change outcome. While speaking with the client, we asked how the sciatica was coming along, to which they let us know that they still have the pain, but now a lot better. When we advised of the no change outcome, they commented that they thought that would be the case, as we got a good reduction for them last year. They further comment that they really appreciate the service being provided. The other one was an ME Bank customer who works as a linesman. They worked with another one of the broker's clients who actually referred them to the broker in the first place. The review also yielded a no change result because they were already on a pretty sharp rate. We spoke with the client to advise them of the outcome and how the rate stacked up in the market. The conversation gravitated to properties, etc., eventually leading to the point where they wanted to know their borrowing capacity with the view to drawing equity on their home and buying another property. An appointment was booked in with the broker via Calendly. Again, nothing dramatic from those two conversations, no big revelations, just good old-fashioned conversations and service that quietly lead to opportunities. This week's Humpday Helper number 169 is more of a caution flag if you're considering CBA for a bridging loan. We recently had one of the brokers go down this path, purely because of the valuations. Their usual go-to provider, St. George, returned valuation figures under what was needed to make it work with them. The valuations with CBA, on the other hand, were a lot higher, so provided the equity required to place the deal there. However, what the broker didn't realise was that unlike St. George, where you only have to demonstrate servicing on the end debt, CBA's policy requires the borrower to demonstrate the capacity to service the monthly interest cost on the peak debt before they then look at the end debt position. According to one of the senior BDMs, this is a relatively new update to the policy. The broker's regular BDM wasn't aware of the change and provided advice based on the old understanding. On this particular deal, servicing wasn't evident on the peak debt. However, the broker was further advised by the same senior BDM that provided the borrowers can show funds available in their account to cover the interest costs for 12 months, then credit would still consider the deal even though it didn't meet traditional servicing. So yes, valuations matter, but policy settings matter even more. And in some cases, it might mean a quiet conversation with the bank of mum and dad. Thanks for listening to Your Broker Admin. If you've got feedback, questions, or a topic you'd like covered on the show, you can now send it through via our Contact the Show page. The link is in the episode notes. If the link's not clickable in your player, just copy it from the show notes or head to the episode description on your phone. A rating on Apple Podcasts, a review on Podchaser, or a follow on Spotify all help the show reach the people it's built for. I'm Rob Cummings, and this has been Your Broker Admin, for those who like their process neat.